How's it going, everyone? It's Sam. I have a little bit of a different video here for you today. We're talking about Amazon stock, and I realize that I've been talking about crypto a lot on the channel recently, but I have been investing heavily into the stock market recently, and one stock that I just started buying some of this week, literally over the last 2 days, is Amazon. And Amazon is exploding here after hours, up 7.5% post-market. And this is because they just announced a 20-for-1 stock split and a $10 billion buyback. So I want to talk about this. If you guys don't mind hitting the like button, subscribe button, I appreciate that. There is also a link underneath the video to the Patreon. In case you want to see right when I'm buying different stocks and cryptos, you can check that out. Now, this is pretty big news. The reason I say that is a lot of people with these stock splits, they think that the company is all significantly cheaper, right? They think that's 20 times cheaper and that they're getting a much better deal. That's just the normal uneducated investor. For people that are probably watching this channel, they realize that, hey, it's really just that the price is 1/20th because they're splitting it 20 different ways. But the important thing is, with these companies like Amazon and Google, it does provide people the ability to run different call options and put options, different strategies that they wouldn't have access to otherwise. Because if you are trying to, if you're trying to sell, let's say you're trying to sell calls, right? You have to have 100 shares at nearly $3,000. That's not accessible to most people. So it does make it so that a lot more people can buy shares and try to work out different option strategies. Now, in addition to this, we have a $10 billion buyback authorization. So we do have some excitement coming up in the coming months about this stock split. We saw Google have the same thing, right? The price jumped up. One other thing about Google, not sure about Amazon, but they are talking about how it can be included in the Dow now because the price is low enough. They look at the price of these different companies and not just the market cap. So maybe Amazon will get that same ability, but this is pretty interesting, right? $10 billion worth of stock. This is a significant amount, but this is replacing a previous $5 billion authorization under which the company only bought about $2.12 billion. So it's not necessarily that they have to buy $10 billion worth, but they are in a really good position. Now, I talked to my Patreon about buying this recently for several different reasons. I know several people that work with Amazon or work at Amazon, and the growth that they're seeing is very high, right? On the shipping side and on the actual fulfillment of packaging and logistics, that's very high. However, we also have other parts of the business. A lot of people don't understand how big AWS is. A lot of people don't understand that they have their Prime business, they have their advertising business, logistics business, and they have AWS as well. So they have a lot of different ways of making revenue, and it's quite high margin. So what usually had turned me off from Amazon was just the fact that it is so high multiple. I mean, we're talking about like a 55 PE ratio. But when you look at their revenue here, it's increasing significantly. I mean, we're talking about 30-40% every single year. Also, net income increasing pretty consistently too. And they are reinvesting a lot of money into logistics right now. They're building out a lot of different centers so that way they can become really the world leader in logistics with their shipping. I mean, think about how crazy one-day shipping really is. So once they stop pouring so much money into that, they'll have a lot of money, just free cash flow coming in. Earnings per share is going to increase pretty drastically. So we have that. We also have, their balance sheet. It's impeccable, like a lot of the other tech companies out there. That's why they can afford to do $10 billion buybacks. We can see here they have cash of $96 billion, receivables of $32 billion. You can also see their current liabilities. They can pay for all today if they want to. So they do have significant amounts of cash here. And now they do have some more long-term debt, but again, a lot of this is because they are leasing out some of these different fulfillment centers. It's because they are reinvesting pretty heavily into themselves. So they will be a cash machine. So I think that they will continue to appreciate over time. The general analyst expectation is $4,200 a share. And I did take a position earlier this week. So pretty big news after hours here. Just want to cover it for you real quick. I'm not going to keep you here for 8 minutes or anything like that to get mid-roll ads. Hope you guys found some enjoyment out of this, and hopefully you know why they're shooting so much after hours. Thank you guys, and I'll see you in the next one. Bye.